Hello there, Mavericks. This is Rob Reinhold. It is nice to join you for the Market Roundup March 9th. And March 9th was an ugly, nasty day. We started the morning off a little bit positive, and then there was selling all day long. Now, the big news today, we got some bad news out of banks. We had a bank called SVB Capital, which is Silicon Valley Bank. They basically came out and said, hey, we need to raise money because we're out of money. We heard Silver Lake Capital do the same thing, but basically they said, we're wrapping up our operations. We're out of business altogether. So the KBE Bank Index was down 6%. JP Morgan, Wells Fargo, they all got hit. Financials were the worst sector of this day. As you can see, the Dow dropped about 1 2/3%. The S&P just under 2%. The NASDAQ, that had been showing relative outperformance for the first time in a long time, actually fell more than the rest. And take a look at the Russell. The Russell was where the real weakness was, and it's been where the real weakness has been for the last week or two. Oil down, gold up a little bit. As you can see, pretty much 4 out of 5 stocks went down. At this point, it's just a really ugly market. And this was the break that I was waiting for. I've been wanting to get more short, but I haven't gotten more short because, again, the technicals are telling me when to go get more short. We had this little bit back here, but we had this engulfing candle. We made this rally. We failed miserably here. Had this candle here. We had a little harami pattern, which is the most common thing to see. And here we have this nasty candle. And I think you can really say that we are below this last swing low. So now we're looking at where is the next point? Well, possibly down here at 387. So that's going to be about another percent and a half until we really get to our next level of support. Now, I want to take a look at the IWM. This is the Russell 2000, and you can see it hardly had a bounce compared to the other markets, and it was a bad break here. Everything here, we're now starting to get the technicals. I've been feeling more bearish, but I've been saying I can't go more bearish until I get the technicals to back it up. We now have the technicals to back up, so I'm definitely looking to become much more bearish here over the next couple of weeks. This is the heat map. As you can see, it's ugly. The only green there I see is GE, which we are long GE at the moment, so we love that. We love when our bullish stocks hold up and go higher in the face of a bear market, but pretty much everything else was taken down with the market. So if we take a look at where we are technically, we were at a -1. Now we can move to more of a -2. So we talked about it wasn't ready yet to go aggressively bearish. Here we're getting much more technicals that are telling us to be bearish. We do have the jobs report tomorrow morning, and I'm going to be talking about that to wrap this up, but the jobs report could save this market somehow. I'm really waiting for tomorrow to really be the nail in the coffin because I think this market is about to head significantly lower. But if that jobs report gives the bulls some sort of signal that they can get excited about, we may have to wait a little bit. There's still lots of good looking stuff on the bullish side. So I'm going to take a look here at United Airlines. United Airlines had a little bit of a breakout out of this high base. It had a down day today, down 4%. And I'm not saying I want to enter it right here, right now, because I do think the market is in a little bit of a free fall moment. But when it does bounce, I think this one looks great. Just think about what's happening with the market right now. Inflation is raging. Interest rates are going higher. People are worried about the Fed getting too tight. Banks are going out of business. Facebook is cutting jobs. But go to the airport. We are not seeing any slowdown in travel whatsoever. And you can see that in the chart here. So for me, I want to let this thing pull back. It's not ready to buy yet. And I think you want to be very chicken on the bullish side. So like a diagonal call spread of just like a $2 to $3 spread. That's a very chicken trade. On the sideways trade, here we have O'Reilly Automotive. Now you can see O'Reilly has been doing nothing. When the markets were strong, it was a little bit strong, but ultimately we are just stuck in this range. Really, I'm going to call it 850 all the way down to 790. So I think you can do a nice butterfly in here. I want to be a little bit more bearish because I'm overall bearish in the market. So I'm going to look for a midpoint of 810. So I might take a look at doing the 790, 810, 830. Put butterfly and let it drift down a little bit into that area. On the short side, there's a ton of shorts. It was not difficult to find a short, but I really like this story because this stock was already breaking down. And when the market had a big bounce last week, this one didn't. It just low based, and here we have the break. So everything's going bad on this one. Already had bad news, was underperforming the market. So pure storage, I like this down to a target of 20. I'm getting more aggressive in my downside targets now that I have a market that is telling me, okay, be a little bit more aggressive on the bear side. So I think down to 20. So I'm just looking at straight long puts on this one. I want to be very directional here, and I want the ability to be able to cut when it gets down to that 20 area and take some profits. Another one I think that looks good is Upstart Holdings. This is basically a quasi bank, and I think there's going to be some more pressure in these. This is a lender, but it's not really a bank. So they don't have all the regulation. There's been a lot of pain already in this sector. And I ultimately think this could go back to 12. That's a big call here because that is basically a 25% drop. I'm not going to play it that aggressive, but I'm going to do like a 14, 16 bear call spread. I'm probably going to get about $1.60 on this, 40 cents of risk, $1.60 of reward. This thing can absolutely move 4 or 5 points in a short amount of time. So let's talk about tomorrow, the jobs report. Estimates are for around 225,000 jobs. The ADP jobs report came out stronger this week on Wednesday. I think this is going to be a strong number, and I think it's going to put some pressure on the Fed. Look, that was all my opinion. I have no idea what the number is going to do. And frankly, I've seen it to where the number came out of what I thought it was going to do, and then the market did something totally unexpected. So my opinion is it's going to be a little bit stronger than the market expects, but I have no idea how the market is going to react, and I have no idea if that is actually right. If we get a number that tomorrow gives the market some hope, and the bulls come back in and it's a green candle, I think we still have to be in the -1, -2 area. I still think this market, again, technically it's saying it's headed lower. I think we still have to stay there, and I think any rally is a good shorting opportunity until we bottom out here on this. So tomorrow will really show us where this market is going. Thanks for joining me. That is the Market Roundup. Goodbye.